Woodburn China podcast with me, Christina Kohler-Coluccia, from Woodburn Accountants and Advisors. Our daily episodes on solving your China business pain points are there to help China leaders, managers, and entrepreneurs with the daily struggles they may be facing while setting up and operating in China. We look at corporate administrative battles such as tax planning, incorporation, accounting, human resource, and labor, as well as cultural and language nuances that may occur. I hope you enjoy the episode. Welcome back to another episode. Today we're going to be looking at how accounting in China is different compared to the rest of the world. Now, accounting practices in China differ in some significant ways from those in Western countries. And these differences are influenced by various factors, including cultural, regulatory, and economic variations. So I wanted to highlight today a couple of the differences for people to get more clarity and understanding. The first one is that China uses its own set of accounting standards, known as the Chinese accounting standards or Chinese generally accepted accounting standards. While efforts have been made to converge CAS with international financial reporting standards, significant differences still exist. That's difference number one. China's regulatory environment for accounting and financial reporting is influenced by the government's centralized control. The China Securities Regulatory Commission and other regulatory bodies, they play a central role in setting accounting rules and standards. The Chinese government has a more direct influence on financial reporting, especially for state-owned companies. This can lead to accounting practices that prioritize government interests and stability over market-oriented transparency. Accounting transparency and disclosure practices in China have traditionally been less robust compared to Western countries. There is now a greater emphasis on confidentiality and protecting sensitive business information. China has also its own auditing standards, which are different from the international standards on auditing commonly used in the West. Chinese audit firms are subject to regulatory control, including inspections by government authorities. In addition, Chinese accounting practices tend to be more conservative than those in the West. This means that companies may be more cautious about recognizing income and assets, which can impact financial statements. State-owned enterprises play a significant role in the Chinese economy, and they often have specific accounting rules and financial reporting requirements that differ from those of private enterprises. Tax rules and practices in China can also significantly impact accounting decisions. Companies may choose accounting methods and structures that minimize their tax liabilities, which is common in the West as well. China's currency is the renminbi, which is subject to controls and restrictions. Foreign exchange regulations can affect the reporting of foreign currency transactions and assets. It is important to recognize that accounting standards are evolving and that differences between China and Western countries may become more pronounced in the future. However, businesses operating in China or considering investment in the country should be aware of these differences and seek expert advice to navigate them effectively. Thanks for listening. If you enjoyed this episode and you'd like to help support the podcast, please share it with others, post about it on social media, or leave a rating and review. Can Woodburn help you? I am offering a free 30-minute call where we discuss the obstacles you are encountering on your China business journey and how we can help accelerate your success. The link to my diary is in the show notes, and I look forward to speaking with you soon.